Hey YouTube, this is Zach with Achilles Financial, and today is going to be a little bit of a different video. What I wanted to highlight is a strategy that I've been utilizing in the Discord. So for those of you who are a part of that community, you'll be very familiar with this strategy. And for those of you that have been on the channel for a long period of time, you'll note that I talk about covered calls fairly often. And one of the cool strategies that we're utilizing here is buying and selling a single group of shares. In this particular case, it is an inverse ETF known as SQQQ, which is the Pro Shares Ultra Pro Short. So essentially this is going against QQQ, which is essentially the NASDAQ 100. And the idea that I'm showcasing here is this idea that you don't always have to hit home runs. Sometimes it's a little bit better to make the safe trade and make sure that you're getting on base consistently. So with this strategy, what I'm trying to do is I'm trying to buy shares of a company, ETF, or fund that has a fairly high volatility and will go up and down fairly repeatedly. And if I watch that price action and get an idea of the range it's going to be in, what I can do is I can buy 100 shares, which will enable me to sell covered calls, at which point in time I can then cash out when the shares are called upon because I'm selling those at the money. The goal here is I'm looking for a 10% return on that investment. So what I'm showcasing here is an export from my broker for this particular account. And to be transparent, I did include where it showcases the commission and fees associated with this because this is inside of a retirement account through that broker. So let's talk about what I've done here and this idea of why I'm targeting 10%. So the first thing here is you can see that I bought 100 shares of the fund. This was back in October, so this all does happen this quarter. So you can see 10/28, I bought 100 shares. The average price there was $50.38. However, during that same time period, I sold a covered call. So this was me selling my right to those shares. So I sold that for $2.10 per share. So that is $210. You can see after the commission and fees, I walked away with $209 from that option. However, over that same time period, the stock or ETF rose up to heights of north of $67 per share. At the time that I sold this, I believe the stock was around $62 or so. But I got exercised, my shares were exercised, so someone took that option and I sold all 100 shares for $54 a share. So essentially what you're taking out is this amount right here minus the amount above. So, or in this case, I'll say plus because it was a negative amount. So $361 plus the $209 from my covered call means over this trade, I made $571. Which if you look at that over the percentage of the total trade amount, I'm going to put a negative in front of that so you can see that this is a return of more than 10%. And again, that's over the course of essentially 2 weeks. So you're not always going to see that there. But I bought the underlying security, sold the covered call basically at the money. So there's 11% right there. So going forward, again, when the stock dropped, I purchased 175 shares. Again, I was targeting that 200, but I wanted some cash to play with left over. But I bought that and then I sold that covered call. So you can see 11.11 and then 11.21 is when I sold that covered call. So the stock moved around a bit. I got $105. I then sold it again after it expired for that same price. So $48 was the first one. This one was $47.50. Was able to sell for $118. So between the two of these, I've now made more than $223 once again. So that's again off of a $8,000 investment in that particular fund. However, once again, you can see that that call expired, and then I closed out the other transaction, which was a $6 one remaining. So we had one expire and then I purchased it. So under that trade, I made $217. Keep in mind that I did not sell in that particular transaction. So going forward, I bought another 15 shares because the price dropped all the way down to $41.16, which during the same time period, I am holding at $45.70. However, going forward, I once again sold another covered call. So over the same time period, we've done $105, $118, and $180, this time at that $46 a share. However, during this time period, the stock price rose up to $47 a share, at which point in time I sold the 90 shares that were not under my covered call. And I sold that at an average price of $47.28 for a total amount of $4,255. So during this trade sequence, for the 90 shares here, which I bought at prices of $41.16 and $45.70, I made $210. Keep in mind, at this point in time, I still have $183. And I also purchased or went back in with the same money that I had less than a week ago. Over the weekend, the stock price dropped, or the price of the ETF dropped, and I bought another 100 shares and sold another $46 covered call. So I still currently have 200 shares, and those prices are again going to be 100 at the $45.70 and 100 at the $39.57. So my average price is somewhere in the $42 range, just north of $42. However, with that 183 and the 116, I've made another $300 here. So I have 200 shares of this fund, but from the current, again, single trade here, and then 5 covered calls over this time period, I'm currently up $1,300. So when we talk about that $1,300 over the amount invested, which we can talk about is probably going to be in the realm of $7,500 in this particular trading sequence, you're talking about a $1,200, we'll call it $1,300 gain over around $7,500, which is currently showcasing an overall gain of 17%. So the reason that I call this out is this idea that, again, we're doing very safe trades right here by selling at the money covered calls in a volatile fund that can go up and down fairly regularly, and you have the capability to play the swings. Now, at the end of the day, I'm by no means a financial advisor, and I do not recommend that you take this as financial advice, but rather go and educate yourself on how to make a trade that you can get a 10% return on a quarterly basis. So what I've showcased here in this exact example, one of the reasons why I think that this is so powerful, in this example, we've done a starting amount of what we'll call $7,500. We're also going to showcase that if I were not to make any additional contributions, but I had a 10% return, so that's the math right here, every quarter next year, then after 5 years, so 2023 through 2028, with no additional inputs, I would have more than $74,000, which is a life-changing amount of money. Now, keep in mind, in this particular account I'm showcasing here, it is a retirement account. This is a Roth account, so I do not have to pay fees on any potential gains. However, if you are doing this within your own account, you will have to pay taxes on any gains associated with this. But looking at this idea, 10% a quarter is a lot more attainable than playing certain options where you're targeting those 50+% returns off a single trade. Now, I do have longer term holdings that we can target. Those longer term holdings, such as a STEM, such as a dividend investment, have different targets. Again, for those growth accounts, for those growth stocks, that's something that you are looking to 10x that investment. However, in this instance right here, your capital and initial investment, in theory, are going to be quite a bit safer. Now, if we look at the same example and we throw in an extra $1,000 every quarter, you can see that my total return, or my total invested, is $24,000. However, I currently have more than $150,000 in this particular account, which for 99% of Americans, this is a amount of money that, if had in a single point in time, is a life-changing amount. Now, if you're looking at all this and saying, Zach, I don't have $7,500, you can do the same exact strategy with $1,000 and $100. So if you're in college and you're saying, I don't have this type of money available right now, you can see that even investing $2,400 over the next 5 years and targeting these safe get on base type of wins, you're still going to have enough for a new car or a number of items that can be correlated to paying down student loans, to making sure you have a safe emergency fund, to purchasing a vehicle, to putting a down payment on a house. So you have the capability to edit and adjust this type of approach, but it all comes down to having a safe way to continue to build that overall capital. So this is one of the things that we cover on our channel and we talk about in the Discord fairly often. If you find this type of information helpful, please let me know in the comments down below, and please leave a like and subscribe. Thanks for watching if you made it this far, and we'll talk soon.